Hello, everybody. Happy New Year's. Hope everybody had a good holiday break. Everybody stay safe this holiday season, or last holiday season, I should say. The first stock analyzing or chart analyzing session for the year. Hope everybody is doing well. We had a pretty good start to the year so far. But this session I want to do a combination of both analyzing charts and setting some setting some predictions of what the next few months is going to look like, first quarter. So we have I have, at least me, I have some plan of attack for the market. So if you haven't already planned, please join me tonight. Let's look at what the market could be doing. So we have an idea of what may happen, things to be on the lookout for, and we can make the most use of it. All right. So I'll jump right into we'll jump right into it. So market today still pretty good. Yesterday we had a huge run up in the tech sector, right? Tech and communication services, consumer discretionary. These sectors were doing pretty good yesterday. Huge ups, especially Tesla, AMD, NVDA, and today they had a pullback. So I don't think I see anything to be concerned about. And definitely a good thing is we're seeing all these sectors like banking, um, consumer staples, industrial, and energy doing really well today. So it's not a complete scary event, right? Where money is just not leaving the market. It's basically just transferring from one sector to another. And so, right. So let's jump right into the charts. SPY. You see SPY is still holding near its all-time high, right? Pretty close to its all-time high. All-time high was almost 480. We were 2 cents short on SPY. I think if you were to look at like the other indexes, like yes, they probably did hit 4800. Yep, 4800. So for those who don't know, XPX is the S&P 500 index, and SPY is just an ETF of that index, right? So a ETF usually there is a little bit of a difference, but not much. You can see, the SPX was over 4800, but SPY was just barely at 480, right? So and the only difference is that SPY being a ETF, it is usually there's usually like a few percentage of error in tracking what's in the S&P 500 index. So that's why there's a price difference. But we see a few days of it did push to 4800, but it's holding above here, right? But above 470. But it looks to me like this is weakness. So where we'll look at it. So this area right here is looking like this area right here, right? So from November last year, and when we push a new area, right, and it looks to just stay there for a while, that's what I'm seeing. So I think we could see a pullback um here, some weakness. We're not pushing any higher. We got to 480, and then we're not making any new headroom. So a pullback could be coming, and that isn't completely misaligned with what has been happening within, um, you know, in the past that I've noticed. January, February, March. Um, Typically, they're they're kind of red months. Well, the beginning of January is sometimes is good. Last year we had a really good run up and some a lot of the stocks, but midway through we start falling. So we can even take a look back at so we have it I have it set to 5 years. Okay. So we take a look back at last year. So just a comparison of what this year has happened in 2021 so that we could maybe be expected of what could happen the beginning few months of 2022, right? So 2021, right? So we had a few weeks of it climbing, and then about midway through, so about around the 20th, right? Um, so the last week or so of January, we had a dip here, right? We had this dip here, then it bounced back up, and then we had a dip again, right? And going into March here. So I think that we could be in for that, right? We have a fall for a few weeks or a week or two, and it'll probably bounce back up and then fall again. So that's SPY, right? So I think that could be happening this year also. We dive down into the hourly. To me, this, even though it's above its 50 and 200 moving average, this right here is a sign of of a starter weakness for me, right? So this is what I like to see when it's good, right? We see this 40-degree angle here of climbing action. But when we see something that's flat like this, it's usually, for me, sometimes I see it as a bad thing, meaning, we could fall again, right? We're going to break down below the 200. We could break down below this 200. So probably maybe test for 70 again, see if there's some support there. But we'll see how it goes. At the moment, it says all prediction and all based of what I've noticed before, right? So an area like that is similar. There's similar action here, right? We see it sideways after a climb like this. Usually, it smells doom, right? So make however you can from that, but that's just what I've noticed before, right? Usually, when I see something like this, it usually tells me to hold off on any buying, maybe watch it, maybe it comes down a few points, and I can get a better price. Just the daily, right? So back to the daily. Every candle here is a day, right? We could pull back, and it's not completely crazy to see it go all the way down to 465. So I think even in November, right, of last year, I made a prediction that we're gonna end up at 470, in the 470 range, and then at its very best 480, which did occur. I didn't expect it to hit its very best of 480. That bounce did catch me out of nowhere. I thought we were gonna end the year at 470, but pleasant surprise like that, that's why we trade. Market's unpredictable. We can make all the predictions we want, but it's pretty unpredictable. Sometimes you get nice surprises like this, right? And if you're someone who likes to trade off at the 50 like I did, right? This would have been a pleasant surprise for you too, right? So off of the 50 or below the 50 is where I would be looking to buy on most stocks. So this line right here is the 50, and as it's at the 50 or below the 50, I would look to buy, right? And you would see it do pretty well. And so most of the time, good return. So that would have been great. But unfortunately I didn't play it. But predictions of the next 2-3 months, going into April. will be first quarter, right? First quarter, the end of so the end of January is when a lot of big tech companies are doing their earnings report, heading into the beginning of January. Oh no, February. I mean, the beginning of February. A lot of big tech stock like to do their earning reports. So that's why the first few weeks of January, the new year, a lot of stocks like to run. A lot of big name stock, like you have things like Tesla, Microsoft, Google, Facebook, Amazon. They're doing all their earning reports. And most of the time, those are big companies that are doing well. So their earnings, they do well, but then they get sold off at after earnings, and usually that's when we see the big fall in February. February going into March. So that's why I always notice that those 2 3 months are usually bearish, right? Bearish months. But for SPY at least, I think we might stay in this range between 470 and 480 for a little bit. Maybe we have a chance of poking a little bit above 480. But other than that, I don't think we're gonna push new heights. Probably not 490 in first quarter, but um, so the first quarter, I think we could probably go below. We could go below this four 460, 465, 460 level, or go back and test it. So the plan could see it go like this, back to 460 before we bounce back up, try to break 480, 485 maybe, and then from there, um, my prediction is that we're probably not going to see 490 or above until maybe May, right? May at the very earliest, probably June is the norm. That's the prediction of it. And so I think that that's what's going to happen. Um, Diving down. So let's dive down to the individual stocks now. I want stock that I hope you guys are playing because EVs are still pretty hot. So Tesla, of course. Tesla had that huge pop up out of nowhere on Monday. Pleasant surprise for everybody, especially those who are holding Tesla shares. If you aren't holding Tesla share, I don't know, or Tesla share, or even just playing or following Tesla. I don't know what's. Maybe you're just not following or don't like to play hot stuff. So, but Tesla is still doing really good. You know, stock that likes to run a lot whenever it does. It's pretty normal to have days where it'll go it'll do $100 days, or on average. We could see anywhere between $25 to $50 a day. So it's pretty hot stock, but completely took me by surprise, and I am pretty happy about. So we broke out of this channel here. I thought we were gonna bounce in between 1100 to 900, right, and bounce in between here, but we broke out of here. Okay, looking at the hourly, hourly still holding pretty well. I like this pattern that it forms, right? Whenever it goes, and those who've been following me for a while know that I play off of the 50 and the 200, right? So off of the 50, I like to, buy when the price is as close to 50 as possible and for a pop up, right? So if you're swinging, like I do, this is a good area to get in, right? Because it's literally price is just hugging that 50. Zoom in closer. Price is just hugging this 50 right here. And from there, going higher. Turn on some of my notifications. Okay. So off of the 50, after this 50 is a great play. I think definitely worth the risk. You can get in a position here. You're at these levels. Set a stop somewhere down below here. You see that today, this is the low that I try to get to, but it got bought up. So it gives you a good indication that hey, there's some buying pressure down there. Right. Whenever price gets down there, somebody's buying down there. See this big wick here? Right. Strong drop too. Strong drop and then get bought up. So and it's been holding above here. So good pickup. You could probably set and buy here. You can set a stop somewhere below here. At for Tesla, I would probably even go as far down as 1100 right down here. But if that's too much for you, too much of a drop for you, I should say, you could set it a stop to right here. But sometimes you will get hit. You will get stopped out because notice here price, even though it respects the 50, sometimes it likes to bleed below. Tesla is like that, and it's pretty crazy. So we need to be careful whenever, and that's why it's good to have big stops in, especially when you're playing Tesla. It's a crazy stock, huge range that it moves in a day. So you can see, at today's range, you went from 1200 all the way down to 1122, right at the lowest. Some days, it goes from 1100 all the way down to 1065. So big wing, big ranges, big swings. It makes it really worth it to you if you day trade it. You know, so good stuff. Tesla prediction with Tesla. One thing I'm really cautious about is so when it's at this 1200 level, 1200 4350 was its all-time high. So as it approaches this 1200, I want to pay very close attention to it because last year this happened. We made a new all-time high, and then we stayed there for a few weeks, and then Tesla, had a big pullback. It went from 900 all the way down to 550, 540, that range, right? So we want to be very careful. That was almost a 50% drop, close to 50% drop. So how crazy Tesla is, that isn't completely out of the blue. So we could have it fall all the way back down to the 800 level, right? 850, maybe even 840, and it's not completely unheard of, right? And it wouldn't take me by surprise too. So you better be very careful at these highs, right? If you can hedge your position, right? And I think that could be it, right? It could be maybe it could follow the same suit as last year. Maybe a range bound between here, right? I still think that this range is still valid. This range between 1100 and 900. I think that even though we broke above this range, I don't know if that is a true break yet. A true break, we will just stay above this 1100 and maybe form new range up here. But I don't think that is a true break. I think that might be a false breakout here. Then we come back right into this range, right? Which is a good thing for us because we want to buy shares and buy long positions of Tesla, but not at these highs, right? Not anywhere at these highs. We want them down here, right? Down in this range. So anywhere below, say 1,000 would be a good pickup area, and then 900 would be even better. Below 900, be a dream come true. That's Tesla. Apple, we have to look at Apple too. Apple is a very big portion of the S&P 500, 7%. And this whole holiday season, Apple has just been trucking it, right? See this move? We had a dip here, but then boom, right up. This is why I like to play the 50 so much. We get good stocks like this, and every time it gets to this 50 or a little bit below it, we take that risk and get in, and then just for that pop up. So nice swing. You know, this kind of trading Apple makes it easy. Right? Catch you at this lows. That's not always going to be the case. 'Cause you're going to have times like this that happen, or you're going to have times like this or this. But generally, for the most part, that's why we always have our stops in. But for the most part, we can play these 50 moving average touches or below them, right? Catch it for the swing to the upside, right? So if you were to catch, you would have, if you caught it down here at 450, oh no, 150, right here, it's already at 180, right? So about $30 gain. Or if you caught it down here, right here at 155, still around $25 gain. So that's pretty good. Pretty good trade for a few days, for a few weeks, about a month hold. Right? Good little trade. Let's dive down to the hourly. So you can see on the hourly, there's 200 here on the hourly, coincides with the 50 on the daily. So when we see it bouncing off this 200, on the hourly, if you're just an intraday or a shorter term trade swinger, meaning just a few days, I would look for that, right? For especially Apple. Apple is something that piques your interest. So at this point, I want to see Apple do for the next few months, right? So January, February, and March. I want to see it come back to the 170 level right here. It made a new all-time high, and today a small pullback. So we could even say that this right here is a resistance area. Oh, let me draw that again. The line didn't stay. This right here is a resistance area, right? So 180. It's 180 to 170. So I think it might bounce in this range. Maybe it'll go a little below, a little bit below 170 here, right? So at this level here. Back to this right here, maybe 165 if we're lucky. So the first quarter, that's what I'm thinking could happen. Apple. Now let's take a look at Amazon. Now, Amazon's been pretty crazy, right? We haven't seen it really move. It's been range bounding, but we haven't seen it. Of all the techs, the big techs, I haven't seen um, Amazon take off yet, and I still still not feel, but see this pressure that's building. It's still in this range. It's still moving slightly to the upside, right? 50 moving average is still above the 200. I still think there's still life in this thing, right? But at the longer the consolidation period allows for a bigger run up. Right? So I still think at the moment, I still think Amazon is still a great play, especially for the people who know how to do credit spreads or how to sell for premium, right? If you can sell for premium, I believe it's great because you can, right here, you can see that there's some support, right, at this 3300. So selling, you can capture a lot of premium by selling things down here, or even below this range, right? This $3,000 range, right? You can sell down here, and you're pretty safe for the most part, right? For a whole year, it stayed above, for the most part, above 3,000. We had one time here, here, and here that it bled through, but it came right back up. So every time it dips like this, right? It has a dip. Today was a red day for Amazon. Good day to sell credit spreads. You could do that weekly. It's so high. It's such a expensive stock that there's so much premium in the contracts that you can just collect. It's basically free money, right? You could do, and it could, if you do credit spreads, it'll only be like maybe $1,000 risk to you, or maybe $500 risk to you. So you just really have to look into it, right? So here, I think that's a great time to sell credit for Amazon, right? Looks ugly, looks very ugly on the hourly. But for something that's been range bounding like this on the daily, you have to really pay attention to the daily, right? If you try to intraday, you can try to intraday this because there's same thing with Tesla. This it's such a expensive stock that there's huge swings in it throughout the day, right? Like just today, we opened it today up at 34, around 34.30, and we dropped all the way down to 33.40, 33.40, 33.30. It was the lowest I seen it today. So that's a huge range. It's $100 range that it had today, right? So even if you were to trade just one share of Amazon throughout the day, you got an easy $100. And I don't know who would turn away from a free $100, right? If you were to, let me pull out my calculator, right? So if you were to do that every single day for a year, say, what is it? There's 340 working days in the year, or times 100, $3,400, okay? Or not 34, but $34,000. Basically, an easy $34,000, right? And that's off one one stock, right? If you have a range of $100 a day, right? So $3,400, and all it costs you was $3,400. So 34,000 in a year, just one share. That's 10 times. That's 10 times the money that you put at risk trading one share. And I wouldn't even say that you're putting that $3,400 at risk, because something like Amazon, you could just hold it forever. If it goes down and you're holding shares, I wouldn't be scared of holding shares at all. I'll just hold that until it goes even higher, right? If it goes down against you, you have the long term. And that's why holding shares is so powerful, right? I would rather hold shares and trade shares than to just do options, right? Because options have expiration dates, meaning they can go worthless on you if you are wrong. But if you are right with options, they do pay out. But just know that it's a double-edged sword. It has the opportunity to both climb really fast and also die really fast. And there's also time decay that you have to fight against. So if you like to be like me and keep it simple, stick to shares, and you could, there's so much flexibility that you have that you could do. And it doesn't mean you don't touch any options, because even though I'm, for the majority of my strategies, I have shares, I still sell for premium. So I still dabble in some option, but not in the options in the sense of beginners mindset of just buying contracts. I actually sell contracts. So the analogy is thinking of like a gas station owner. People can buy lottery tickets from you, right? Or scratch off tickets. But if you are the seller of those lottery tickets, you are guaranteed like a 5, 10, 20, or however much those lottery tickets cost. But in the odd chances that somebody hits a jackpot, you are out, right? So it allows you to be like that. But the more you have a higher chance of winning, right? And you can, most of the time you can probably collect it all. So, but aside from my rant, I hope that you guys are taking advantage of this. A good stock like Amazon, it's at its 200. Also, the 200 is a great pickup area, right? We go back to every time that it touches 200, it was never a bad pickup, right? It may bounce like this, right? But you didn't lose anything, right? Bounce like this, even heck, if you were to swing it for just 3 days, you would have got something here, 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 right? You didn't even lose it here too, because it ranged around here and then a blast off. So every time it touches 200, right? Now that pattern could change, but hey, for something like Amazon, I will bet I would rather buy Amazon than short it, right? Something, a powerhouse like this. And every time it goes below its 200, that's golden opportunity for you to pick it up, right? I wouldn't even bet an eye. If I had the money at those times, I would be buying, right? So even here today, I did open a position too. So credit spread right here, right? So that's a golden opportunity for you guys. Right? Don't miss it out. Especially if you see the price moving like this, right? It's a range bound like this, and it's a middle of this range here, but it's slowly climbing up, right? So I would even say this is like the bottom of it. Right? But let's go. Let's continue moving forward. Another great pickup. Facebook. Facebook is in a great area, right? Above its 200, close to its 250, right here. Good pickup. Where I like it even more, my favorite setup, because I like to have more longer term trades, meaning a few months, or even if I can get it a few years, right? You know, is this 50 weekly. And it takes a lot of patience, because it rarely comes to this 50. Maybe we get it once a year, sometimes maybe twice a year, depending on how bad that year is. But look at this. Look how the track record. We have a few times where it did bleed below this 50, but those were just golden opportunities. Look at this. Every time it touches the 50, bleeds a little bit maybe, but it goes and it always makes it higher, right? And yes, past data doesn't predict the future, but it gives you a good indication, right? Gives you things with a good track record. You're more willing to take the risk on it than something that's been really bad. So Facebook, at least, is it's been a great stock to hold, especially if you were, imagine you were to get it at 2013, but not even then, right? 2000, because you had opportunities in 2014, 2015, gay opportunities. Basically, every year there was at least one opportunity that gave you a good long term buy and hold, right? Even if you didn't hold it for all that time, the number of years, if you just to hold it for a few weeks, few months, it was great, right? And patience is one. of the things that we need to also focus on when we trade. It's when the trade presents itself. Do you have the courage to take it? Or are you going to miss out and say that you were the type of person, or are you the type of person to say, "Hey, I wish I had," or are the type of person that says, "Hey, I'm glad I did"? Which person are you? And for me, I'd rather be the person that says, "Hey, I'm glad I did." That's how you make money in the market, right? Facebook, grand opportunity. Here, if you swing it for a few days, or even here, if you buy for a few weeks, months. And don't let people scare you with like the news of whatever, you know, that we're gonna be a bear market or something. They don't know. Nobody knows for sure what's gonna happen in the market, right? Even though there is a chance of it, that's why we always trade with having a stop in place. That things like that happen, you make sure first you make sure you invest and trade in good quality stocks to begin with, so that when something like bad like that happen, it doesn't complete to zero and never recovers. Second, you trade with a stop. Stop will keep you safe when the market is open, right? The market is closed and the crash happens, we're all dead. No matter who you are, we will all be hurting. Right? A third, the biggest thing is you only trade with money you can afford to lose. That's the biggest one. Money that you can afford to lose, that you won't blink, or you won't even skip your heart won't even skip a beat if you lose it, right? If you want to be successful, you need those three things in the market. It doesn't matter if you're day trading, swing trading, long term. You have those three things, you have more than enough at your disposal to become successful. Right? You're trading with money that you're not dependent on. You have a stop in place, and you hold really good quality stock, right? You're holding and trading good, really really good quality stock. So that's three things. So my prediction for Facebook, right? The next 3 months, we could probably see it sideways. I don't think we're gonna see it go any too much higher. This range right here, right? 360 to around maybe a low. I don't think we're gonna push this low anymore, but we'll probably stick in the 340, 335 range. But from 360 to 335, I think we're gonna stay in this range, right? It's tight range. Out of the majority of the techs that ran this last year, Facebook didn't run yet. So one thing to also be cautious of. Now, last year I did talk about this stock, and it finally, um, hopefully, it finally had its breakout. Now, see, we marked this, and we looked at it a few times, but it's such a slow stock that I have since slept on it, and now I'm regretting. But not because I didn't trade it. I've been keeping an eye on it too, and I have it for a few of my clients that I hold for, and I buy things for. But myself personally, I sold my position here, and I should have held it because, man, that huge pop up. But I don't think all is lost yet. I still think it's still it will still present an opportunity to get in again. TSM, right? TSM semiconductor stock. So the thing to look out for now is to see where it establish another range, or where whenever it comes back to the 50 moving average, right? Close to the 50 will be a good buy. And so we have a blast off like this, right? Similar, right? Breakout here. It could be a few weeks. We come to see how it come back to the 50. That's a good pickup, right? When it's close to the 50 like this, good risk to reward, because your risk is below here. So you set a stop down below here, right? So between here and your stop is what you're risking, and your upside is pretty great, right? So that's what to look for. So you don't FOMO into it because right now we don't know how high it's going to go, and we don't know if it's going to be a false breakout yet because it would suck if you get in and then boom, all of a sudden it comes back into this range. Then you just lost out. And if even if you don't sell, what you're going to be losing out on is time. So you want to see, we want to see if it's going to continue, right? Maybe we catch it up here a little bit, but closer to the 50, where we can establish where we want to, how much risk we want to put on. That would be better for us, right? So TSM. So yesterday and part of today, I know NIO was also doing some crazy things, right? We had a huge day for NIO, but one thing, and what it did was it made it pop up, but it still didn't break the ceiling around 35. Right? It didn't break the ceiling yet. So a bearish sign for me is when the 50 crosses below the 200. But it depends on what kind of trader you are. This is the daily, so on the daily I wouldn't buy it, but maybe you're thinking, hey, NIO could be a good investment, right? So here it's pretty low, right? Good pickup area here. If you think it can go a little lower, maybe you stick to the monthly for a longer terms thing. So you pick it up down at the $20 level. 23, 22, 21, 20. Good areas to pick up in IO. Now we take a look at NVIDIA too. NVIDIA had a big run up yesterday as well, right? And still great area to pick it up on, right? The 50, it's close to the 50-day moving average here. So good pickup. And like I said before, that's what I'm looking out for whenever I'm interested in a stock. I'm already capped out on Nvidia because I bought 100 shares a while back when it was probably more than double my entry already. I think I got it down here, but here is a good pickup too, or add. I'm not looking to add anymore. I'm still holding my position, so yep, I picked it up right here before the split. It's 4-for-1 split here. It's still going, so it's still good pickup area. It's a little high on the weekly and monthly, but I don't know how much it will fall, and I probably wouldn't bank on it falling because if we look at the monthly for video, it really rarely falls down. Right, this right here was like a once in a lifetime thing. Well, not once in a lifetime, once a decade thing that has happened to it. You see how high it went before and it just kept trucking. That small little pullbacks here. But then boom, this happened, right? And then it just picked up the same steam again. Right? People realized it was a good deal. Boom. Right. So I wouldn't expect too much of a fall from it. At most, maybe it goes back to the 260s, 250s. If we're lucky, 250. It's 250 will be down here. Right. And then it'll probably stay in there for a few months. So if we do see a fall, in the first quarter, I think we see it down in 250s, which will be a great pickup for anybody. Right. Mega text. So maybe we'll look at a SoFi now. Oh, SoFi, we see this range. I think it's still a really good pickup. And the reasoning behind that is, we've seen it in areas like this before, consolidation down here, right? Pull back, holding support, holding this level. And so if you were to see this same thing, maybe you anticipate another, another run up, right? If you were to pick it up now and it goes back up to here, you know, maybe, later on this year, it goes back to those levels. That's 100% return, right? If you get it somewhere down here or close to 100, right? Close to 100, probably 90, 80, 90, almost 100, right? So you see this, and it's not just once, right? It just happens once here. It happened here too. In here, this breakout, boom, comes back down, boom, again, boom. It repeated itself one, two, three times. We have fourth time, and maybe this fourth time it takes off the ceiling, right? This resistance right here, it just blows above it, but it's holding above this 14 level. So that's a good sign. Good sign that there's some support there. People's not letting it just die completely. Right? Cheap little stock, right? If you have the patience to play it, it's gonna be something that's gonna be later on in the year, right? So if we look at this, maybe we see it in June or something like this, right? Where the fall happened later on in the year, and at the beginning of the year, it was still down there. Well, actually, this was June, right? So half a year, so 6 months, so 6 months periods in between, right? Beginning of the year died off, and then halfway through the year, boom, died off again, and then boom, 6 months, 6 months in between each peak, right? So 6 months out from here, probably about mid June again. So not bad for 6 months play, right? Throw $1,000 in there, or get yourself 100 shares, right? Now we're looking at last one for the night. I know you guys are probably relieved to not hear me lecture. But last one for the night. Let me see. Oh, ping. Same sort of setup, right? Same sort of setup. We're looking for it to boom again, and it's at its lows. Okay? Good setup. I have hopes for this one because this one, we have a thing on our Discord that allows us to see how much institutional holdings there is, and right now, Ping has about 86% institutional holding. To me, that makes that what that tells me, that what I gather from that piece of information is that they're not gonna let this thing just die and go complete to zero. Right? Somebody likes it enough to where they're gonna hold it. Right? Stocks that are this low, usually it takes a few years for them to run. Really run up, meaning we're not meaning it goes to this high, all-time high, meaning that it could go to that all-time high and takes off of the above that. Okay. We're talking about 5x what it is now, right? So 5x from here, it was somewhere in the $100 range, right? So definitely a good ad. I'm interested in this stock, and I'm also holding it personally. So uh, it's not just me giving my opinion and not holding it. I'm also holding it too. So holding uh, and hoping that it makes a good run. And it's just not blindly hoping to, you know, a big difference between educated hope. But all right, with that, I'm gonna end it here. I think we looked at a few big blue chips, um, and a few little ones that of smaller caps that people can afford. High beta that people can afford, and you know just throw a few bucks into it and play. And I gave my prediction on a few things. Um, so, happy New Year to everybody. I hope that you guys are prepared for this year. And if you don't have a financial goal, and trying to predict the next few months, right? But like a real goal that you're trying to reach with your portfolio. I encourage you guys to set those and try to reach them. I do that every year, and sometimes some years I completely blow that goal out of the waters. Meaning, I go above and beyond that goal, and some years I barely make it to it, or some years I don't even touch it, or I don't come close to it. But it's good to have those goals set so you know what you're aiming for. You're not just aiming for a random spot, or you're not aiming at every tree in the forest. You have a one tree that you're looking for, and you're looking for that, right? So have a target, have a financial goal of your portfolio, and don't just say, hey, I'm going to try and make it to $1 million, or $1 billion, right? Make it a goal that's, well, oh, I would, let me not say that, because maybe your portfolio is of that size where you can hit $1 million at the end of the year. But let me say, make it a manageable goal that you can reach, and have milestones that you want to hit. Maybe check in with yourself every quarter. At the end of every quarter, check in to see if you hit that goal, and build up to your end of year goal. And that's how you're going to step forward through um, your life as an investor, as a trader, or as a whatever you want to be. Yeah, market participant. I just so it's a new year. I hope that you guys are setting that goals for yourself. Um, and I myself, I want to share one of my goals with you guys. And hoping that this year, I've been last year I started this session thing and try to help out people. This year I want to make it so that I help at least maybe one or two people. I don't know if by hosting these sessions been helpful to anybody, but I do it primarily for myself and to keep me up on my homework. And but this year I want to actively, try to help somebody and help them get or develop or stay in the market longer and make a difference in their life. So that's one of my goals this year. And I also do have a financial goal. Last year I made uh I was able to reach my goal of making like $100,000 in a year. So this year, even though that last year I did reach that, I want to do it again. You do it once, it's luck. You do it two times, maybe it's some skills, but I want to keep continue doing that. So that's one of my financial goals too, for the end of this year. And I just wanted to share with you guys. So, so that we put a number to it, we put a thing. And I also want to help, one or two people out, and be able to just make a difference in somebody's life. That's what I want to do by having these sessions. And hopefully it is helping you guys. But with that, I'm going to end it here. Thank you, everybody, and have a happy new year. And continue trading well, stay safe, and good luck.